What's up guys, Steven Ducks here. So a lot of people have been asking me what's my morning routine and what do I look for. And I think a lot of basic questions here and there. So today I'm going to go over all those questions all together. And before I get into this video, make sure to click the like button and subscribe. We're going to have a lot of more beginner upcoming videos. So stay tuned. And also Statistics 102 is coming as well. Finally! And I know a lot of people are asking, so it's going to be the next video or two. And let's get into today's video. So generally, I wake up around 9 o'clock and I look for stocks that on the top percent gainer. Top percent gainer you can typically find on every single platform. Either you have E-Trade, Equity Feed, Interactive Broker, all types of brokerage have their own platform. You can use all platforms to scan over on Nasdaq market and NYSE, maybe OTC market as well. Typically, I don't really scan for OTC market because the volume is super low. What I'm typically looking for is a very high volatile pre-market action. So one of the scanner I have is the volume has to be over 100K. That's number one. Number two, it has to be over 20%. If it's not over 20%, then I just automatically filter it away. Also, a lot of people are asking, do I look at most, tickers that goes down a lot, let's say top losers, and negative 50%, negative 60%. I generally don't really look at that because when the stock is dropping 50, 60%, it's scaring people. And when people are scared, they don't want to really buy the dip anymore. And especially with that type of stocks, the stock doesn't really get a lot of volume. So there's no volatility after market open generally. Most of the time, about 80% of the time, they don't really get that much volume unless there's some type of news going on, which is the 20% of the chance that happen. So once I find the ticker I want to trade, I'm interested, which is one over 100K, over 20% in the pre-market. Then more look for anywhere the flow, the market caps, which is a little bit difficult for beginners to decide where you should trade and what ticker you should pick as a priority. So I'm going to give you very simple selections for you. If you're just beginning to trade penny stocks. So when you're generally looking at the market, you are looking at small cap, mid cap, and large cap, which is billion-dollar cap. Now, most of the patterns that we created, which I mentioned in a couple of videos before, will be first red day, overstaying gap down, or bounce short, gap up short, all those type of tickers, and the patterns are all generated from the small cap statistics. Now, some of them are mid caps, but none of them are in a large cap. And so when you're seeing a large amount of volume pouring the pre-market into a billion-dollar cap, which is going to be very difficult to really manipulate the pattern into these type of market caps because it's unlikely to work. We track samples that based on small caps. So that's why certain patterns works in small caps, certain patterns works better in the mid cap. And you can sometimes dip buy works great in large caps. So when you are a beginner and you're looking for long strategies because you have a really small account and then you have a cash account, a lot of people are underaged, so they're not feeling the requirement to open up a brokerage account with margin. And I highly suggest that when you have a cash account, tends to trade the market cap a little bit higher, which is over 500 million. So one of the patterns you're looking for, which I mentioned in the previous video, you're looking for a large panic into these type of large cap, 30 to 40%, sometimes 50%. The chance of them bouncing will be over 80%. So that is very great strategy for small account to start very small and slowly grow into 20,000, 30,000. So last, a lot of people are asking me, well, do I really look at SEC filings? Do I really look at the news? How do I really value the fundamental side? So when I'm typically trading penny stocks, a lot of penny stocks doesn't really have a fundamental. Those are really trashy companies that are looking for money from the investors. So the company will either issuing warrants, do an offering, and make their stock drop to under $1, and they would just do another reverse split, 1 to 50, and make their stock go over $1 again to really meet the Nasdaq requirements. Once they do that, they can do it again and again and again. Because when they're doing reverse split, and they will reduce the flow to a really small amount, which it's a very interested market for market makers if they really want to pump the stock, and they can hire people to pump the stock as well. So since the flow is really small, if there's a super high volume, which is high demand, compared with the low supply, then the price is likely to go up. And once they go up, and they're going to do offering again. So when you are trying to trade all those small caps in a long term, especially trying to hold them for a long term, never do that. Invest into something better. Small caps is only for intraday trading. And for you guys have a small account or have a cash account, if you can't sure and you're looking for to buy a stock, it's sub pennies and you're looking to hold for a long run, then long term it's unlikely to work. Also, one of the most asked questions, do I really read any trading books? And I'm gonna give you this straight out. Well, most of my trading experience comes from the screen time. I spend countless amount of hours researching statistics, looking at the patterns, learning level 2s, and it's all learning in front of the computer. And books doesn't really teach you that much detailed stuff. And all those high winning percentage patterns are whether you discover by yourself, you can learn the concepts from others, but all those details you have to figure out by yourself. And if you're a super beginner, then you can read something like Stock for Dummies. And for more advanced traders, you can read like Momo Trader, which is pretty good, highly recommended. And Psychology of Trading teach you the psychology of how to really think about what other people are thinking to build a counter strategy. Those are the general books I typically read. So that's gonna be the end of the video. If you wanna learn more about general statistics, more strategies, we're hosting a conference in Manhattan, New York. Right now it's on early bird sales. Make sure to grab your tickets, and it's going to be on sale for a month. Click the link below and it will take you there. So that's it. Thank you very much, and I will see you guys next video. And if you're a super beginner, then you can read Stock for Dummies.